Hello, I'm Cristina Marujos, and you're watching the Daily Market Comment at xm.com by Marios Hadjikyriacos. Geopolitical headlines rattled markets late on Friday, with the benchmark S&P 500 index ending in the red after Iran seized a British oil tanker in the Strait of Hormuz, escalating hostilities with London to a new level. Oil prices naturally moved higher as the sizzling tensions likely raised the implicit likelihood that this conflagrates into a hotter conflict, disrupting crude supply in the Gulf. The situation remains fluid and unpredictable, and even though a diplomatic solution is still possible, further escalation seems more likely before and if we reach the negotiating table. For now, how harshly Britain responds may be key for risk sentiment, especially since this will be the first test for the new Prime Minister, who will be announced tomorrow. The dollar outperformed on Friday, aided mainly by the New York Fed walking back some dovish comments from its president, but also by some relatively confident remarks from the St. Louis Fed chief, James Bullard. He said in no uncertain terms that he would like to cut rates by 25 basis points in July and not by 50 basis points as markets have been speculating. This is especially important coming from Bullard, as he is probably the most dovish FOMC member. Since markets still price in an approximately 20% chance for a 50 basis points cut, that means the path of least resistance for the dollar may be higher over the next couple of weeks, especially if Friday's GDP data are solid. The ECB will meet on Thursday, and investors will be hanging on Draghi's lips as they try to decipher how aggressive a stimulus package the central bank will deliver in the coming months. Markets are already pricing in almost 50 basis points of ECB rate cuts by December, so for the euro to weaken from here, Draghi would need to signal that an even bigger easing package is in the works. German press is reporting that ECB plans to restart its QE purchases in November, according to sources, and if Draghi endorses such expectations, that could definitely be enough to send the euro lower. This was today's Daily Market Comment at xm.com. Have a great week.